Welcome to the pre-market insight for May 4th, 2020. Today's session is going to serve as a recap of last week and a look forward to what action we have coming up this week. Let's take a look at the charts. Futures, and we're coming in down just about, let's say 19 points, call it, at 2803 on the S&P 500. And as we spoke about before, we're going to use today's video as an opportunity to look back at where we are generally in the wider trend and context of things, and then from there be able to piece together hopefully a cohesive story and narrative as to how we are to interact with the market going forward this week. So let's zoom all the way back out to the monthly to begin with. And as you can see here, we've had a very, very bullish response to the sell-off that we had for the past just about, call it about 5 weeks or so, just about 4.5 weeks. And we zoom into this just a bit more so you guys can see it a bit more clearly, and remove some of these lines for you. Check. Great. Right. See it a lot more clearly here. So we had this bullish downdraft from the COVID-19 crisis that we are all currently probably still experiencing for those of us who are still under quarantine. And looking at the chart here, you can see we had a very bullish response that took us back into that, almost reclaimed the very open of this, the very open of this bar here at around 2900. We made a high intraday of 2965 to the upside, and since then we've had just a very small, as it stands, because we just started the month, so this is an active bar that is still being opened. But for the close last month, you can see this is a very bullish response. We held the 2018 low of here at 2316, and we bounced right back up into the range that we were trading for between beginning of 2018 and the end of 2019. So as it stands right now, looking back for at least the very last 2 years, we are simply, all we've done is had a false breakdown to the downside, and we're now back into the sideways consolidation that we had between a low here of around 20 to the downside and a high at around here at around 2880 to the upside. Recall, we broke out here at, what was this value? 2942. This is where we broke out at the beginning of 2019. That took us into this rally that we then began selling off at around February of 2020. So if we zoom down now to the weekly time frame, now that we've established that at the very least we've had a very bullish response from breaking to the downside of the range, now we're back in the middle of the range, and so we need to look on the lower time frame to understand the particular nuances in terms of the behavior of both buyers and sellers to be able to come to a conclusion as to where possibly do we go from here and how do we position ourselves for either scenario, to the upside or to the downside. As you can see on the weekly chart, we've had 1, 2, 3, 4 weeks of upside, followed by an inside week or consolidation. Then we broke above this level here at around 2850 to the upside. That took us into the most recent price action into 2946. And we've had thus far 2 days of selling that formed the shadow. This high here at the high was 2965, and the close was 2817. So we sold off just about 15 points to make the closing bar of this candle come back within the range. So again, on the monthly, we've rejected to the downside, come back to the middle of the range, and on the weekly, we have rejected to the upside and come back into the middle of the range. So that is neither bearish nor bullish. It is actually, for the time being, just neutral on the weekly time frame. If we zoom down to the 10-day, 30-minute now, you can see clearly very nice downtrend in place. Very orderly selling to the downside. Here, just about. And what that has set us up for, if we look on the hourly chart, you can see this just a bit better. As you can see this very clearly defined level of support here, just at around 27.54, and then we have this level here at around 27.30 to the downside. So I would expect, given that we have so many areas of levels of interest for buyers to possibly come in, that we may test those levels very early on in the week, and then given the title of today's video, buying behavior, that is what we really need to be paying attention to going forward. The reason why that is because for the entirety of the rally that we've had thus far, buyers have showed up exactly where they needed to in order to defend the short-term momentum to have continued upside. Yes, we've had a very nice little short-term snapback, you can call it. But now that we've come into levels of where we previously just bounced around from, if we go back to the 4-hour, you can see this probably even more clearly. This level right here, in between the 28.40, 28.50 to the upside, and 27.20 to the downside, now that we've come back into that range, I would expect some more consolidation if we do not test this 27.20 level early to the downside. Because all we've done, again, as we spoke about going back to the weekly chart, is come back into this area of consolidation, this inside week that we had now 2 weeks ago. And so that is important to see whether we're going to defend the levels that were defended twice now for 2 weeks in a row. This low here at 27.17 and this low here at 27.11. Provided that we can stay above 27.17 and 27.11 to close the week, then at the very least, all you can call this is a area and time of consolidation, and not bearish or bullish on either side. Of course, when you come into these types of areas and of consolidations, this is when you need to be looking for and concentrating on relative strength and weakness, because it is going to give you the opportunity to leave the indices for a moment while the indices catches his breath, digests, and decides which direction it wants to go, whilst individual names will begin to peek their head above water and begin to show their outperformance or their underperformance. So definitely keep an eye on that. That's the ES. So let's take a look at gold. Again, start off with the monthly chart on gold. And as you can see, we were talking about the close above 1770 being very particularly important. On gold, we rallied up and through that 1770 level, but we rejected to the downside. Thus far, we are, however, still holding this close here at 1693, which was the close of this previous monthly bar. If we zoom down to the weekly chart, you can see here that all we've actually done is consolidate at highs. Recall, regardless of what your opinion is, the market can and does do anything it wishes at any time that it wishes, regardless of what we think as traders, as investors, as speculators on whatever time frame. The market can and will do whatever it wants when it wants. So the fact that it is doing what it is doing, we should always be paying particular attention to that. Having rallied into these highs here at 1788, look at the response of the sellers to attractive prices. They were able to sell into that strength, but have now gotten less and less for their selling efforts. You can see here we made a low at 1691. We made a low here at 1666. We made a low here at 1676. And now in this new candle, we're currently right smack dab in the middle of that range. So what we would call that a very clear, nicely defined uptrend, very clear overhead level of interest that can be resistance if we come back to test it, but we're clearly in a bullish ascending, some would call that an ascending triangle, some would call it a wedge, but keeping it simple, smartly, very simply, we are building out value at the top of the range in gold. What does that mean? Buyers are responsive to lower prices and are causing the bid to continue to be strong in gold. So I would definitely be looking for a long trade in gold if it gives me the opportunity, pulling back into these levels here at just around 1690 to 1700. Again, you can see this very clearly also going down to the 4-hour. You can see this level here at just around 1680 that we've been bouncing off of. However, we do have this slight downtrend to contend with. So perhaps we may meet some selling into this 1712 area. Perhaps look for a curling back down into 1700 before we resolve one way, most likely to the upside, given this nice, very uptrend we have. Take a look at TLT, and we'll zoom out on this on the monthly chart to begin with. And as you can see, having broken this very clear downtrend that we were having just about a year and a half, 2 years, call it 2 years, between 17 and 19, TLT took off like a rocket to the upside, began to consolidate in this area right here between just around 134 on the low end and 147 on the top end. We then went ahead and broke out of that level and ran away to the upside and hit 179.70. And we're now, look at what we're doing, essentially consolidating at highs. Again, the market can do whatever it wants. So when it is doing what it is doing, we ought to be paying attention. We are building value at the highs instead of having a impulsive reaction to the downside and coming back into this level here at around 144, call it 148, which we broke out of in, call it August of 2019. The fact that this is consolidating at highs gives me confidence that on the lower time frame, remember we were speaking about this 166 level, this very clear area of balance that TLT broke out of just a couple of weeks ago. We came to test this 170 level up here. We rejected, but now look at what's happening. We have a convergence of moving averages as well as this prior support low here at 166.44. Surprise, surprise. Given this clear area of balance that we broke out of, TLT is holding that 166. Provided that TLT holds that 166, I would be looking for buyers to begin coming in on the bid and looking to push this market up once again to retest these highs here into 170, 175, and this high here at 179.70. The time frame, possibly within the next month or two, provided that we hold again this 166 level on the TLT. Let's take a look at Netflix. Netflix, everyone's favorite stay-at-home stock. Start with the monthly. As you can see, clear breakout to the upside to new highs here at 391. And what are we doing on Netflix? Instead of impulsively reacting at highs and coming back down into this level, we are building value at higher levels. Buyers are coming in on the bid on Netflix and bidding it up. If we take a look at the weekly, you can see here very clearly we had a very nice little orderly selling, very orderly pullback just almost into this 390 level that was bought up and closing at just around 415 on Netflix, back into almost the top of this level here at around 420, which it previously did in July of 2018. Quickly take a look at Apple before the bell rings. I will make that the last one so we can get you guys going for the day. Apple made a high here at 327 earlier on this year, coming back into that level. However, we're seeing a bit of resistance to the upside, I would be looking for this, particularly this 303 level on Apple. If we cannot reclaim that within this week or the next, Apple may be looking at some trouble, looking to roll over, perhaps a test lower into these levels here at around 260 to the downside. Be safe out there today, guys. Keep it simple, smarty.